Hey everybody, it is Greg Gossett from Gossett Trading and Mentoring Live, and today is Tuesday, April 21st, 2020. We're again on the final hour of the trading day. I mention this each day, but in my opinion, the most valid time of the day to make your buying and selling decisions is at the end of the day, particularly in the last few minutes. During the day, you have the day traders and algorithms controlling the pricing. At the end of the day, you have the large financial institutions. They come, they step in, they take control of the pricing, and they start moving it and taking the power away from the day traders and the algorithms. In my opinion, they are the most well capitalized. They have very, very smart people. They have the best technology. They have the best information. I think they crunch the numbers during the day, and at the end of the day, they come in and decide what they're going to do, and they move the price. And I would rather piggyback on the large financial institutions, kind of piggyback on their knowledge and information and so forth. So that is why I make the majority of my buying and selling decisions right at the end of the day. So anyway, thank you so much for coming by. It's been a wild one. I'm starting to get the feeling like I did about 3 weeks ago with this volatility picking up, and it seems pretty crazy. Oil has been unbelievably volatile. We'll touch on that in a minute. But anyway, listen, thank you all for coming. It's always nice to see you here. I always look forward to seeing my friends here in the chat. I think we have a really great group. I mean, we have a diverse group with a lot of good insight and experience, good comments, great poems, and I just really appreciate everybody being here. I really do. So, okay, well, listen, the Dow is currently down 557 points. It's down about 2.35%. The NASDAQ is down 261 points, down 3%, and the S&P is down 77.69, down about 2 3/4. So it looks like NASDAQ is taking the worst of it today. So anyway, let's take a look, see who's here. Hey, Kamal is here. Good to see you, my friend. Always nice to have you. Good chatting with you earlier. David is here. Hey, Dave, good to see you. Hope you're having a good day in Colorado. Scatty13, hello all. Hello, Scatty. Appreciate you being here. Hey, Dan, good to see you. Hello, Greg, and hello, great group. Hey, that's Triple G there. Greg, great, and group. Miko, hello, sir. Nice to have you here. I hope you're doing well. Looking forward to our lesson on Thursday. Mount Doji, hey, buddy. What is going on? Always nice to have Mount Doji here. Mount Doji was one of my first viewers a long time ago, so I appreciate that, Mount Doji. Quad Racer, hey, good to see you. Hope you got my email, and I look forward to speaking with you tomorrow. And Bob is here. Hola, hola to Bob. Good to see you. Mount Doji says, left some money on the table with my USO puts, but I'm still celebrating my win. Yeah, I was wondering if you still had those, but nice trade. Man, historic. Way to go, Mount Doji. Marco, hey, buddy. Good to see you. Appreciate you being here. Hope you're having a good night there in Slovenia. Frank, hey, buddy. What's happening, Frank? Always nice to see Frank and his poems, and what a guy. Appreciate you being here. Zach, hey, good to see you, Zach. Hope you're having a good day. Well, and Steve Burns, we are in interesting times. Hi, Steve. Always an honor and a privilege to have you here, sir. I really mean that. I mean, somebody with Steve's experience and all his educational things that he has, his books, his courses over at New Trader U. Just want to put in a plug for him because it's really valuable information. And I'm concerned about showing it on the screen, Steve, because of my YouTube thing. So anyway, newtraderu.com. Steve says, we are in interesting times. Man, is that an understatement? Yes, it is. But thanks, Steve. Quad Racer says, email received, Greg. Thank you. Okay, well, good. I will look forward to speaking with you tomorrow then, Quad Racer. And okay, well, man, I don't even know where to begin. Well, I guess I'll begin from the beginning. So first of all, we are going to run the U.S. legal disclaimer. After that, we're going to come back. We're going to take a look at my current positions, talk about when I bought them, why I bought them, what the methodology, what the strategy is, and how I'm going to manage them going forward. After that, some of you have been kind enough to share your trades with me, and we're going to be going over those. And when I go through those, if anybody has any changes, please let me know so I can update the chart. After that, we're going to come back, talk about trader psychology, my favorite thing, trading words of wisdoms, really everyone, it is very important. Trader psychology is so important. It is part of a well-rounded plan. You know, I have a student from South Africa, and we had a lesson last night late, and you know, he said, Greg, I've never been able, I've always heard about a trading plan and putting together a trading plan, but I didn't really know what the trading plan was. I just thought it was buy here, if it looks high enough, sell it. But you know, a trading plan consists of position sizing, adjusting for volatility, looking for a confluence of setups, all this kind of stuff, stop losses. But you know, there's a lot of moving parts, right? There are a lot of moving parts to a trading plan. And so, you know, following that plan is very important. I mean, it's tough enough to put together the trading plan, but to follow it is near impossible sometimes for some people. So that's why I do like to talk about trading psychology, and hopefully you'll listen on a day where it will really seep in. But you know, let's always look at risk first, reward second. You know, if we watch out for risk, then the profits will take care of themselves. But man, if you feel like you have to try to make money quickly, or you're forcing, or you're revenge trading, it's just not going to work out. So let's keep that in mind. Let's try to position size to where you can follow your plan. And it really comes down to that. If I said, okay, you're going to buy 1 share of Apple and follow your plan, I'm almost certain you would, because the dollars and cents that you're making or losing wouldn't affect you. You just, okay, I haven't hit my stop yet. I haven't hit my profit lot target yet. But you crank up to 1,000 shares, all of a sudden everything changes, right? So anyway, that being said, we're going to talk about trader psychology. After that, we're going to go down through my watch list. We're going to see if I can find a new trade for today. I do have 3 requirements when I'm looking to enter a new trade. First requirement, as always, I need to look for a confluence or a combination of indicators lining up, and ideally on multiple time frames. I look at indicators such as MACD and RSI, moving averages, ATR channels. I look at all of these as potential groups of buyers, and you are going to put yourself in a much better position. You're going to increase your odds to have a profitable trade if you're in with the company of as many other groups of buyers as possible. So the way that I do that is I look for a confluence or combination of indicators, or in other words, a confluence or combination of groups of buyers lining up. That's requirement number 1. Requirement number 2, make sure you have a good risk reward ratio. This one's a tricky one, because you know, you want to make sure that you have at least two times the profit potential to the upside than to the downside. And then, but how do you figure that out? Well, you have to figure that out depending on some filters that you have, like, you know, major moving averages above you as possible resistance, RSI levels above you as possible resistance. You could say, hey, I'm going to buy at 50, sell at 40. That's my stop, and my rewards up to 300. Well, okay, you have a pretty good risk reward ratio, but is it realistic, right? It has to be realistic. So risk to reward, at least 2 to 1, is extremely important. And then third, correlation. Do not have too many correlated stocks. You don't want to have 5 different oil stocks, especially on a day like today. You don't want to have 5 different tech stocks, you know, especially on a day like today. You want to be diversified. You can have more than one tech stock. You could have more than one oil stock. But the way I do it is I can't buy more than one on one day. I like to stagger in. And then lastly, account heat is extremely important. I have a maximum of 60%. So, you know, if I have $100,000 in my account, I'm never, ever, ever going to put more than $60,000 to work, no matter what, right? Even if all the positions are completely non-correlated. So anyway, that's the plan. That's what I'm looking for. I'll go down through the list. If I find something I like up on first pass, you know, I'll mark them, take a look at the end of the day as we get closer to the close. I'll go through them with a fine-tooth comb and literally just look for the best setup. Which one has the most confluence of signals? You know, who has the majority of signals lining up here? Who has the most? You know, which one looks best on multiple time frames? Which one has the best risk to reward? So I think it's a good policy. I mean, honestly, the thought of taking one one position per day, just the best position per day, I think is a pretty good way to go, honestly. And then if I find something at the end of the day, I'll go ahead and I will enter it right near the close of the day. And then when the market closes, if anybody has any questions, please let me know. I'm happy to answer them. Happy to clarify anything that we discussed. If you want me to look at some stock symbols, I'm happy to do that. If you would like me to take a look at a stock symbol before the market closes, feel free. Just go ahead, put the ticker in the chat, but make sure you put a star by it, or a banana, or a little puppy dog, or whatever, just so I know that it is time sensitive, and I'll do my best to get to it before the close of the market. So, all right, well, that's the plan. So listen, hang tight. I'm going to run the U.S. legal disclaimer, and I will be back in about 40 seconds. Thank you, everyone. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. Okay, well. Christopher is here. Good to see you, sir. Always appreciate you being here and having you here from England. Thank you. Brian is here. Hello, friend. What's going on? Good to see you. Always proud of Brian. Brian's, I think, the youngest member in here, and just really glad he's here, right? He's out here learning about stocks and investing. Fantastic, Brian. Proud of you. Steve Fern, this is an oil apocalypse. Ha ha. That is true, Steve. That is true. Zach says, Steve Gregg, who or what is most to blame for this oil drop-off? Anything specific or just aspect of the times we are in now? Well, Steve may have his own opinion, but I think in general, Zach, what we have is we have a perfect storm against oil. You have lots of supply. There's no demand. You know, people are not out driving like they normally do. That's worldwide. You also have Saudi Arabia and Russia, you know, that had cut their oil prices and just cranked out a bunch of oil. So it's a perfect storm for oil right now. No demand and lots of supply. Look at this chart. This is USO on the 5-minute chart. Look at this monster run. They halted trading down here. I was kind of looking for a trade, but I was a little scared, to be honest with you. But I didn't see a trade. Now it's just cranking. But this is on a 5-minute, on a daily. Look at this, everyone. My gosh, that's a huge reversal back. But anyway, we'll go through. We'll take a look. Okie dokie. Well, let's get to it. Take a look at current positions. I'm grateful that I was pretty light today. A little bit of a down day, but not too bad considering. I did buy Adobe when we had the 10-50 EMA cross. This is a good back-tested approach to trading. Adobe doesn't win on every single trade, but it does back test well. I did buy it up here a couple days ago at 344.17. Yesterday it was up just a smidge. Today, big day down. You know, my initial stop on this, my initial entry was the 10 crossing over the 50. If the price does close below both the 10 and the 50, I will take half of my position off. If then the 10 crosses back below the 50 on a mechanical basis, I will take the other half off. My emergency stop is down here at 310.90. That's taking my maximum loss, dividing it by what the true range is for 2 ATRs. That gives me my stop. You know, one thing on here, Dave, you know, Dave was asking about when I'm going to increase position size and so forth, but this is a really good formula that helps do that. I do want to point out that if I took 10%, just a 10% position size up here and divided it by the number of shares, I would have had twice as many shares, but using the 2 ATR, because of the increased volatility, it only had me by half the share. So that is positive, especially on a down day like today. Apple is down $6.90 today. I don't have any directional positions on this per se, other than I do have some long-term calls. Let me put the arrows back up here. I did buy Apple. I bought calls June 16th, 2021 calls, so more than a year out. I bought $250 calls. Right now it's at $270. If it comes back down here, closes below halfway this washout bar, I will go ahead and lock in a loss. If it rejects the 1 ATR channel up here, that will be my place to take profits. But it is profitable so far. It's been a good trade, so happy for that. Okay, SPY, world famous SPY trade. I know everyone gets tired of me saying this every day, and I promise you I get tired of saying it every day. I can assure you of that. But in case we do have some new viewers, I do want them to understand I do buy the SPY, SPY, every day at the close, hold it overnight, sell it first thing the next morning. This is based upon a study from Liz Ann Saunders at Bespoke Invest on Twitter, but this back test is from 1993. Every day since 1993, they tested two approaches. Approach 1, buying the SPY at the open, holding it through the day, selling at the close. If you use this approach every day since 1993, you'd have a negative 13.9% return. However, if you did the opposite, which is what I do, buy the SPY at the close, hold it overnight, take the overnight risk, sell it the first thing the next morning, plus 634.2% return. Past performance is no guarantee of future results. That is true. Blue line is the buy in the afternoon, hold overnight, sell in the morning. Orange line is buy in the morning, hold through the day, sell in the afternoon. You can see the latter definitely had much better results. Doesn't mean it's going to work like that in the future, but if I am going to allocate and invest money in something, I'm going to allocate something that has a good back-tested record. You can see there's major ups and downs, but over the long run, it has had an upward drift to it. So 2019, this was a wonderful approach. 2020, not so hot tamale. But again, this is a very long-term, think of it as a long-term trade. I will do this every day until I quit trading, right? So that being said, I did buy the SPY yesterday at the close, 281.59, and I sold it for a loss, 276.80, which is a bummer. But you know, trying to find the silver lining, it is under the 200-day moving average. So I bought a half a position because of the increased volatility. I took a half of a half, so I only had a quarter position. So again, I will be buying this again at the end of the day. Okay. Let me just take a look real quick. Sorry, I'm just having to deal with something here. All right, good enough. Okay, on to everyone else's trades. Steve Burns did buy the Qs with the 520 crossover. Good back-tested approach. Doesn't always win, but the nice thing about a crossover, it gives you a good setup to where if you're right, you can be right big. If you're wrong, you can be wrong small. And that is the key to profitable trading, is put yourself in the position where you have a good risk to reward ratio. Like I said earlier, bought it here 196.30. Moved up very, very nicely. Great percentage. Last couple days, it's come back down. Kind of a big range bar here today. Steve, if you have any updates on this trade, if you're making any moves on here, changes, please let me know so I can update that. But so far, even with the couple down days, really good profitable trade. Monster. So Steve did buy Monster back here on the 8th, $60.20 roughly with the 520 crossover. Couple days sideways, had a huge monster day up, right? But then came back down, moved sideways and down today. So looks like currently a little underwater on the trade. So again, Steve, if there's any changes here for you on this trade, please let me know for updating. Google. Steve again did buy the crossover with the 1030 EMA cross. Bought it here at I think 1259. Moved sideways, went up. Today, kind of a big day down, down 3.23% today. So it looks like it rejected that 200-day. So again, Steve, if you have any changes there, please let me know. Apple. Last one for Steve. We had the 1050 EMA crossover right here. I think Steve took it about 283. Again, good back-tested approach. Doesn't always win on every single trade, but you never know, right? So you take the trade. If it goes against you, you get out, hopefully with a small loss, and if you have the potential for a big win. So this one has gone down the last couple days here. It's down about 2% today. Do we have a cross under 273.69, 273.17? So it is still above. So again, Steve, if you have any changes on that, please let me know. And then on TLT, clear winner of the day is Bing He. Bing He bought the bonds at 168.60 back on the 17th. Moved sideways, had about a break-even trade yesterday. Not exactly sure what the setup here was, but it didn't matter because it has gone up nicely for Bing He, and he's positive on a day where everyone else is negative. So anyway, that's it. Those are the trades. Okay. Steve says, Greg explained it. The whole supply chain is backed up with huge drop in demand through the pandemic with the stay-at-home orders. Yes, no one needs more oil. They already have all they need. True. Thank you, Steve. Dan says, I'm planning a Steve Burns marathon, readathon, of his very inexpensive books he has on Amazon. I read the ones about using Darvis techniques. Also was easy to read and not too long. Super useful. Yeah, everybody, Steve has the best books. I think my very favorite book of Steve is Moving Averages 101. That's really what got me interested in Steve Burns. That's what got me interested in meeting and studying with him, but I've read all of his books. But yes, the Darvis book is very interesting, a little different way of investing, more of a trend trading way of investing. And Steve also has some books that are actually fiction, but with the trading theme, rich trader, new trader, rich trader, or rich trader, new trader. Dang. Anyway, I've read it. I should know. Bing He, good to see you, bud. Yeah, I just went over your TLT trade, so congratulations on that. Wade, hey, how you doing, Wade? My poem, LOL, in the market, you got to have no emotions. Trend coasting and a girl in your house rubbing you down in lotion. Ah, my poem, LOL, in the market, you got to have no emotion. Trend coasting, and a girl in the house rubbing you down with lotion. Very good, Wade. Thank you, sir. That's the first poem of Wade. We're going to start calling this Trader Poems Hangout, right? Mount Doji, I would like to hear your thoughts on OFC and XOM. All right. OFC. It's a V1 Mount Doji, which is good, but again, it's above the 1 ATR channel. We have the 100-day moving, 200-day moving average and the third ATR channel up here. You know how I am, Mount Doji. I just look at it as risk to reward. I mean, sure, we could get up here. The main question here would be, where would be your stop? I mean, you know, if your target was a 200, it has a good chance of getting up there. It's up today. But for me personally, you know, I'd rather buy down here in the value zone. I'd rather buy in this area and sell in this area than buy up in this area. Exxon. I have a friend that just sold a bunch of Exxon puts at $40, so he looks like he's okay now. This isn't bad, but see how we made a lower high? We made a lower high and we did not wash out this low. Is a V1 here. could be a decent risk to reward. It is up today, which is really strange, right? With oil being down so much, it is up today. So that is a positive, right? That is a positive. Let's look at the weekly. Well, we came down. We've had that nice move up. We're fighting with the third ATR channel. It's okay. If I were to take this trade, I'd get out with a close below halfway of this washout bar and probably target the 50. That would be my move. MasterCard. Well, Tesla. Sorry, MA. I put in. All right. Well, Tesla is coming back. MA. Too high for me to buy up here. What I'm looking for is a pullback into the value zone. The value zone is between this 1 ATR and this -1 ATR, the two green lines. So, again, I like to buy in the value zone, sell as it goes up, and then buy that dip. But as far as the dip is concerned, it's not in the dip area enough for me yet. So that is my take on that. Steve says, looks like I'm going to go to cash today with all the broken ranges and trend reversals, selling everything. Oh, wow. All right. That's big news. That's big news from Steve. So Steve says, Senate strikes a deal on $484 billion relief package for small business hospitals testing. Wow, that's huge. Thank you, Steve, for letting me know. Wade says, I have all of Steve's books on audiobook and I listen to them over and over, tattooing them into my brain. Yes, same with me. I feel you, Wade. I feel you. All right. So, listen, before we go through my watch list, before I go down and look for some possible candidates today, before I decide on my, one trade of the day at the end of the day, the one that looks the best, as I mentioned earlier, I do like to talk about trader psychology. It's extremely important. There's a lot of good Twitter channels out there that spend a lot of time and effort, burn a lot of calories to help us with understanding good thoughts about trading, about how important trading psychology is, good trading words of wisdom. I just love this channel. This is Stock Market Mentor LLC. This is Dan Fitzpatrick, very famous trader. I'm sure many of you are aware. It's at Dan Fitzpatrick on Twitter. So listen, he knows a lot. He's been around. I think he's trading champion, national trading champion. So if he says something, maybe we should, read it, take it to heart. Dan says, over time, one counterproductive trading habit will cost you everything, one loss at a time. So what does that mean, right? It means that you have one counterproductive habit that you repeat over and over and over again, and eventually it costs you everything. Just like a casino. A casino has a small edge on every roll of the dice or deal of the cards. Are you going to lose all your money just by playing for 10 minutes? Well, of course not. But if you played forever over time, that small little edge that the casino had would wear you down and you'd lose all your money. So in my opinion, maybe Dan differs, but in my opinion, that's what Dan's saying here. Over time, one counterproductive trading habit will cost you everything. What could a counterproductive trading habit be? It could be not taking your losses quick enough, not position sizing correctly and doing it over and over and over. It could be taking your profits too soon. No one ever thinks about that, right? People think like, oh, you can never go broke taking profits. Totally wrong. You have to make a certain amount on your winners to pay for all the losers that you're certainly going to have. So, being impulsive, not taking a trade when you're, passing on a trade you're supposed to, not passing on a trade that you're not supposed to, letting your losses run too far, not letting profits grow enough, not doing your homework, all sorts of things, right? But just sit down in a quiet room, sit at a table and think to yourself, all right, what is my what is my counterproductive trading approach that I'm taking? What am I doing wrong? What's the counterproductive part? Like for me, If I had to be totally honest, we all have things to work on, but it would be letting my profits run a little bit more. That's could be considered counterproductive. I do my best. I do everything I can to help me hang on to those, but that is probably what I need to work on a little bit more. Cutting losses, I'm very good at that. Position sizing, I'm good at that. Doing my homework, doing everything. Not taking too many positions. I feel like I'm doing pretty well on all of those. But for me, letting the profits run a little bit more, that would be mine. So think about what yours is. Be honest with yourself. Take a hard look at yourself, an honest look, and think to yourself, am I trading too much? That's counterproductive. Am I not taking trades I should take? That's counterproductive. Am I position sizing incorrectly? Or maybe you're doing a bunch of them. So anyway, I hope that helps. And thank you so much, Dan Fitzpatrick. Really appreciate that. I read that and I thought that would be helpful for the group. So, all right, here we go. Oh, man. All right. Hold on, everybody. Katie's giving me, I apologize. Give me 20 seconds. Okay. Man, I put her outside. I'm about to start. She wants to come in, so I say, okay. And then as soon as I get in the podcast, she wants to go out again, and I won't be able to concentrate. So anyhow, let's take a look here. Let me see what's happening. Okay. Oh my gosh. All right. Go sit down. That's it. All right. Well, look, let's real quick, I haven't shown this for a bit, but look, let's choose wisely today, right? This is for me. Greg, choose wisely today. Just make sure everything looks right. Good confluence of signals, good risk to reward ratio. Keep in mind account correlation. Keep in mind account heat. But, today and every day, regardless of what you do, let's choose wisely on what we're doing, right? This is by Diana Cooper. I don't know who that is, but thank you so much, Diana. And good for me to remember and all of us to remember. Hey, by the way, I did an interview on Famous Dave's YouTube channel, and he is a VIX expert, used to trade on the floor. And so that did come out. I'm putting the link here in the chat in case you'd like to watch it. It's about 20 minutes and just kind of some background on my trading and trading approaches, and want to learn a little bit more about me. I put it there in case you want to take a look. Okay, so let's get to it. Let me do a quick run through here. So, I am going to just stick with my plan on Adobe. I do have quite a small position size here. And I just, following the rules on this trade. And the rules, again, is I had the 10-50 crossover, get out with a close below both of them of half. So anyway, I'll stick with that. Apple's long term with the calls. And the SPY, I will buy again that today. So that's about it. All right, here's Apple. Well, we talked about Apple. Any new possible, that's weekly. Any new possible trades? No, but this is a good illustration of, I didn't want to buy any stock actually up near the second, third ATR channel, because sometimes they can go up, but a lot of times they're going to revert back to the mean. Well, that's kind of what's happening. We've stuck ourselves back into the value zone. I want to buy a dip. In order for me to buy a dip on Apple, now that we're in the value zone, I need to see it stop going down, move sideways, look for a V1 or a V2. That would be one approach in the coming days. Another approach would be a bounce at the 200-day, or a rejection of the 200-day, or a close under, close back over. Again, I like buying back here in the value zone, and it would give me a good risk to reward ratio with some possible ease of movement back up if we can bounce. So that is my plan. I've been talking for the last few days about the price coming back into the value zone, waiting for it to come back into the value zone. Sometimes you feel like it's never going to happen, and the market's just going to take off without you, which happens. It happens sometimes. But anyway, we are coming back into the value zone, and so I do want to get into another trade on Apple, just as long as I have a good setup. Hey, Frank has a poem. The market has a way of making one feel like a fool. It even wants to pay us to store oil in our swimming pool. A trader must accept the market is right. Alas, trading can be a fright. Thank you, Frank. Very good. How long does it take you to make these poems, Frank? I'm just curious. Is it something you can just do in 5 minutes? Do you have to think about it for 18 hours like I would? Let's read it one more time. The market has a way of making one feel like a fool. It even wants to pay us to store oil in our swimming pool. A trader must accept the market is right. Alas, trading can be a fright. And boy, I'll tell you what, man, 100% it can be. This has been the gnarliest market I've ever seen in my life. Okay. Contrarian. Oh, nice. I like that. Contrarian says, I'm here from Famous Dave's interview. Glad to be here. Oh, thank you, sir. Appreciate that. Nice to have you here, and thanks for watching that interview. Dave is great over at Famous Dave's on YouTube, and actually I'm going to be interviewing him. We're going to be talking about the VIX. So VIX is kind of a wild, strange animal. I am not an expert in it, but David is, and so I'm looking forward to interviewing him. Adobe we talked about, still under the 1050 EMA crossover. Frank says it happens when it happens, Greg. Okay, good to know. Just comes out of the ether, I guess, huh? Amazon, whew, big day down today on Amazon. We have earnings coming up here in a couple days. Did get up to that 6 ATR channel, and that was about all it had. Many times that's the extreme move. Up at the 6 ATR channel. Can go higher and can go lower, but anyway, big down day today, big reversal, still holding the 5-day, so that's good. But nothing on Amazon. Boeing, nothing here on Boeing that I can see. Let's take a look here. Okay. Berkshire Hathaway. Well, again, we're going to have a lot of this. We were above the 1 ATR channel, the green line, pulling back into the value zone. That's what I'm looking for. It generally always eventually gets back in the value zone. Now I need to look for the price to stop going down, look for V1, V2. But this is a perfect example of buying up here at these extended levels. Sometimes they do continue to trend, right? But the majority of times, statistically, they do come back, and I'd rather buy it back here if we get a setup. I think Beyond Meat's up today. Look at that. Huge, big day today, up almost 8%. Gapped up, went higher, reversed back down. If I was in this trade, I would definitely be getting out with this big reversal and rejection of the 100-day moving average. Caterpillar is down today in the value zone here. Just would need some kind of V1 or V2 setup. Carnival Cruise had the big dip down, rallied into the value zone, really moving sideways here, really consolidating. I would imagine this thing's going to break one way or the other, whether it's to the upside or the downside. I have no idea or when it's going to happen, but I am fairly sure it will happen. But what direction, I don't know. I would just have to wait for a setup. But it's really consolidating and moving sideways, winding up for a move, but no signals here. Dow Jones finally poked its head back into the value zone. Look, just because we've had a couple down days doesn't mean it's the end of the world, right? I mean, we're in value, we go above value, we come back into value, we go under value, we come back into value. So right now we're in the process of above value, coming back into value. Walt Disney back in the value zone, reversed off its lows, which is good. We're only down 485 points at the moment. Nothing here, but now that we're in the value zone, looking for this to go sideways, consolidate, stop going down, and then a trigger is what I would be looking for. Etsy finally down after this monster move up. My gosh, is that a move, huh? Nothing I can do here. Much too extended. Back in the value zone. Facebook back in the value zone. You know what I'm going to say. Just needed to stop going down, consolidate, look for a V1 or a V2 trigger. Gold is also down today, but coming back into the value zone. If the 5 EMA crossed under the 20 and then cross back over, that would be a potential entry. Or if we can get in the value zone, go sideways, look for a V1 or V2 trigger. Google down today, coming back into the value zone. That's what I'm looking for. I did take Google here when we had the 520 crossover. It moved up nicely. I sold here half of the position when it rejected the 200. And then yesterday, I sold the rest of my position because it was over the 200, under the 200, and did close below the previous day's low. So I decided, well, I just didn't like the price action, if you remember. So I'm glad that I did sell it when I did. Doesn't always work though. Sometimes you'll have your signals, it doesn't look good, you'll sell it and it'll just continue up, and that's how it goes. But in this particular case, it was fortunate. So back into the value zone, I'll be looking to buy. Goldman Sachs, nothing really there. Home Depot down, look for a pullback into the value zone. IBB down, is holding the third ATR channel, so is down today. Right down here at the 200-day moving average is what I would like to look for. And again, it's always important. Look at a chart. It may not be anywhere near where you want to buy it, but look at it, analyze it, and go, if it did come down to here, would it be a good entry? And that's what I like to do. I just like to analyze the charts where they're at and then look where I would buy them if they got there. And when they do get them with a legitimate signal, that's when I would buy them. But don't rush it. Don't force it. Don't let headlines sway you. Just have a plan, have a zone, and then buy. Put the trade on. You're going to win, or you're going to win, or you lose. You can't have any choice over that, but you can have you do have a choice of when you're going to buy, depending on if it gets into your zone. Intel, again, that's why I don't like to buy over the 1 ATR channel. Generally, back in the value zone. This is good. It is holding. Oh, spoke too soon. It's going to say it is holding the 50 RSI. It's at 49.98, so pretty close, but just need this to go sideways, V1, V2. Rejection of the 200 might be good as well. IWM, pullback, nothing on IWM. Johnson & Johnson, still very, very strong. Look at this move, unbelievable, my gosh. CarMax, slightly down today, but I don't see anything here. Here we make a lower high. I'd like to see it wash out this low. Coca-Cola back down into the value zone. You see, this was moving sideways a lot, and I was looking for a break either to the upside or the downside, and this one broke to the downside. So now that we're in the value zone, sideways motion is what I'd be looking for. Lockheed Martin lost the 200-day moving average, rejected the third ATR channel. That does not surprise me. MasterCard, down today, don't see anything there. McDonald's would have to poke its head in the value zone. Merck, I was really struggling with that 200-day moving average, and now we're getting close back into the value zone. It's going to be an interesting week with the earnings. Microsoft down pretty substantially today, I must say. I would love to buy a stock like Microsoft in the value zone. Netflix has earnings today, I think. So that should be interesting. Is up slightly. So I imagine people are expecting pretty good earnings. Nike, nothing there. Philip Morris was just hanging out in this range. Again, this is one of these that are going to break one way or the other, and this seems to have broken to the downside. PayPal is down. Got right up there to the third ATR channel. 92% of prices fail there. The Qs, of course, we talked about that. You know, if we could come back into the value zone, if we could get the 5 to cross under the 20 and then back over, or perhaps a bounce at the 200-day, that, again, I don't like buying up here. I consider it overvalued. I want to buy in value or below value. And then if I buy at value, I want to sell above value. If I buy under value, I want to sell at value. Silver, ooh, big down day today, nothing there. SPY had the overnight loss on the SPY trade. I'll be buying that again. Well, you know, I tell my students, if you're in a trend trade and you get a big reversal bar, something that, you know, just looks pretty gnarly and big reversal, well, this is what I'm talking about, where it gaps up higher, goes down, bearish engulfing bar to the downside. If I was in this trade, which I'm not, I definitely would be getting out of this today. Being he, looks like the sole winner on the day. Nice trade, being he. But this is a bit of a bearish bar also. Opens higher, reverses lower. So anyway, if you have any changes there, let me know. Tesla, we just looked at. Look for a pullback in the value zone. Twitter, getting deep in the value zone. I just need it to stop going down sideways. Then look for a V1, V2 trigger. United Continental, hanging in there, I must say. We closed below the value zone, in the value zone. Now I'm looking for a higher low V1 or V2. Natural gas, big day yesterday, gave a lot of it back today. UNH, big move up. You know, we've had some move back down, but on low volume the last couple days. Down here, bounce at the 200 would look interesting. All right, oil. Well. You remember I almost bought this yesterday, right? And sometimes your rules, you follow your rules, and then and you don't take a trade, and it goes zooming up. You're like, gosh, dang it. Other times you don't trigger, you follow your rules, and you stay out like I did. And I was luckily able to miss out on this monstrosity to the downside. But you remember yesterday we were at like 29.89, 29.98 right at the end of the day, and I had to follow my rules. If it would have closed above 30, I would have bought it. I would have positioned size correctly using 2 ATRs as my stop, but it would have been I wouldn't and not had very many shares, but it still would have been a monster day to the downside. Well off the lows though. Well off the lows. That's interesting. VIX has got to be up, right? Yeah, VIX is up 6.3%. Did find some resistance here at the 1 ATR channel. Verizon, above the 1 ATR channel. Like to see it come back into the value zone. Walgreens, nothing really there. Walmart, down, but not down much. Did hit that third ATR channel. Remember, 92% of prices fell at the third ATR channel, and this one did it picture perfectly. XLE down, but, you know, not down that much considering what happened to oil. So that's interesting. That is definitely interesting. Really interesting, actually. A lot of dynamics going on there. Financials down 3%. We made a lower high, so I would expect that we would go down and test this low. If we could test this low, then get a V1, V2, I would buy that dip. Real estate down a bit today, finally coming back down to earth into the value zone. Utilities, same. We were above the value zone. Now we're back in. XLV down today. A lot of support here with the 200 and the 50 and the 20 and the 1 ATR channel. And then Zoom is down today. So honestly, I really don't see anything to buy today. I am going to hold on to this small position of Adobe because we still are under the 1050 EMA crossover. So I'm going to stick with this one, just stick with the rules. You know, I could see myself just getting out of this because of the big bar down here. But it's holding the 50 RSI, it's holding the 20-day moving average. It is back in the value zone. So I'm going to go ahead and just trade this like my plan was. And my plan was get out a half position if we close below both the 10 and the 50, which it seems to be holding, and then get out of the second half position if the 10 crosses under the 50. If you remember gold, I had the gold trade a little while ago, and it was a similar situation where I did take the trade here when the 5 crossed over the 20. Then 3 days later, the price did close below both the 5 and the 20, so I got out of half my position, but I was thankful that I did hold on to the other half and took the other half all the way up to here, and I did get out here on that top day, which was fortunate. Apple, I don't have to do anything with that, and that's it. So I think Steve said he was getting out of all of his positions today. The Qs, Monster, Google, and Apple, and it looks like Bing He. If there's any change there, Bing He, just please let me know, okay? Frank says, stormy weather here. Hail, winds, cable trouble. Oh, interesting. Where do you live, Frank? Steve says, you are a master trading poet. Great one. I agree. Frank, thanks, Steve. What a day. What times? Uncharted waters. Frank says, oil cheaper than water. Sounds like a song. CJ Biz, hey, let's take a look at Disney. Oh, we looked at that, didn't we? Yeah, I don't see anything here on Disney at the moment. You know, we were above the 1 ATR channel. We are coming back into the value zone, which is exactly what I'm looking for. Again, any price above the 1 ATR channel, I considered overvalued. Any price in the value zone, I consider at value. Any price underneath the value zone, I consider undervalued. And, you know, just generally, I don't want to buy overvalued. I want to buy at value, sell above value, or buy undervalue and sell at value. Either way, you know, selling at a higher price. But I don't want to buy overvalue and then have to get stopped out at value. I'd rather buy at value. So, you know, we are down today. If I could just see this move sideways for a while, CJ, that is what I would look for. Just, I want to see it stop going down. I want to see some buyers coming in and then look for a V1 or a V2. Frank says, I took a small position on Netflix. Oh boy. All right. Let's take a look then. Oops. All right, we got Frank in here at 426. Oh, already in the money. Beautiful. All right, Frank, I got you down. Any changes on this, please let me know. So you do have earnings, so hopefully that will go up for you, my friend. Steve says, I'm happy my QLD and Nike 1050 did not trigger. Yeah, I know, right? Those almost triggered yesterday. So yeah, let's be happy for that. Steve says 520 crossovers were mostly big winners. 1050 crossovers right in time for the market reversal. Yeah, you're right. The 520s did work. Bing, he says, I am holding TLT. 10-4, got that. Oh, Fairfield County, Connecticut. Oh, great. I don't know why I thought, Frank, that you lived in California. I kind of had that idea that you lived in California, but I was totally wrong, which I often am. Which I often am, and I'm okay with that. All right. You know, I have a student in South Africa. His name is Kyle, and talk about motivated. He gets up at 5 in the morning, for our lessons, because then, you know, that's late at night for me because he's in Africa. But 5 in the morning, you wouldn't even thought that guy slept. He's up, chipper, sharp. Wow. Okay, so it looks like the only thing I'm going to do today is I'm going to buy that the SPY, 1/4 of the SPY, and that is it. I am grateful on SPY though that I am buying it for a little discount compared to where I bought it at yesterday, or sold it at earlier today. I may take it through earnings tortured, I would imagine. This is what we need to look for, Frank. We need to go to CNBC. We need to see a picture of Netflix earnings, and of course have the smiley picture from the CEO. That's all you need to know. If you see him smiling, you're golden. If you see him down, looking down, disgruntled, disheveled, the wind out of his sails, then you know they missed on earnings. Right? You don't even have to read the headline, just look at the picture. So I'm rooting for you, buddy. I am rooting for you. I mean, I imagine that Netflix, you know, doing pretty well during all of this. I mean, I don't know a person in the world that doesn't have Netflix, and I sure watch a lot of it. So we're rooting for you, Frank. We are rooting for you. You have any plan what you're going to do with the trade? Are you going to sell it after hours? Are you just going to hold it? Let's take another little look here at Netflix. Well, it's not far from its high, huh? It's hanging in there pretty well today. That's what tortures me. Yeah. Well, I'm rooting for you, my friend. All right, let me just make sure that I have what I'm supposed to have. Let's look at oil here on the 5-minute chart. Man, did that have a rally off of that low? I mean, I was pretty sure it was going to zero today, and look at this rally that it had. My gosh. You know, look, we're coming back into the value zone, so I imagine there are some buyers, if they wanted to get back into USO, that would be getting in right here. We went above the value zone, come back down. Now we're in the value zone. You know, there's a chance that we'll find some support here. I'm not going to trade this, but this is a 5-minute chart. But it doesn't matter if you're looking at a 5-minute or a 10-minute or a yearly. You know, we go above value and we go back into value. Look at this big bar here. Boy, that was the bar that kind of told us that we may have an up move, especially on this volume. Immediately went back down, faked a lot of people out, and then just ran and ran and ran. I mean, that was a 29% move. My gosh. All right, we have 1 minute. Dow's down 582, NASDAQ's down 284. Okay. Frank says, I play hot potato with stocks these days. Yeah, not a bad idea. Bing He says, SPY looking very bearish, hitting 50 Fibonacci and 50 SMA last 2 days and gapping down today, forming a bearish island. Oh, interesting. Yeah, well, who knows? I'm just waiting for this to come back into value to look for a V1 or a V2. But we are back in value like we almost always do. Okay, well, that's that. And let me take a little look-see over here. All right, so I bought SPY at 273.04. Boom. Boom. And boom. 273.04. Really? I mean, it's at 276, 273.62. Wow, did I get a price on that? 273.04 is where I bought it. And now it's up 46 cents after hours. Oh. All right, everybody. Let's check out for I'm excited for Frank here. Let's see what happens. Wow, well, that was a good start to the SPY trade. All right. Well, listen, while we wait to see what happens with Netflix, let me just squeeze my plug in here today. I hope you don't mind. But I do want to let everybody know that I do offer private one-on-one coaching and teaching lessons in the evening time via Skype. I love to teach. I do have a course. You know, I've been full-time trading for 24 years. I do have a lot of experience. I've studied with some really great traders, masters, coaches like our friend Stephen Burns. I studied one-on-one with Steve for a couple of years. Dr. Alexander Elder, I'm sure you know who he is, Kerry Lavorne, Larry Williams, and I've learned a lot of things and a lot of different approaches from these traders, and they're all great approaches. But you know, the course that I teach is I teach everything I've learned from them and the things I've learned myself over the 24 years, and that's what I teach you in my course. And it is $1,000, but I think it's worth every penny. It's 5 sessions. Each session is roughly 3 hours per session. So it's 15 hours, one-on-one coaching. I teach, like I said, I teach all the different setups that I have. I teach everything about trading psychology, position sizing. And I think probably the most valuable part of the course is that during the first half of each lesson, I teach you. The second half, you teach it back to me. We do lots of chart study. We do lots of going through charts day by day, you know, and I'll ask you every day, okay, where's the setup? Is it a good risk to reward ratio? Where's your entry going to be? Where's your exit going to be to the downside? Where's your exit going to be to the upside? What's your position sizing, right? What looks better, this chart or this chart? And explain to me why. So, you know, just like in anything, whether you're playing the guitar, you have to play the guitar a lot. And in my lessons, what we do is we do a lot of reps, and you have to teach me, and you have to break down the chart. So you can't just sit back and listen and go, oh, yeah, right? You have to teach it back to me. So it's pretty intensive. Like I said, it's $1,000, but I think it's really worth every single penny. So if you're interested, please let me know. What I like to do with a prospective student is I like to have a Skype call with them. I like to just ask them some questions, get to know them better, learn more about their trading process and their experience and their frustrations and their goals. And then you can ask me whatever you want about the course, what it entails. Any questions about me personally is fine. You know, there's no charge for this Skype call, and I promise there's no pressure. I hate that when there's pressure, so I certainly don't do that. But you know, it is important that we get on, ask each other questions, and see if we're the right fit. So if you're interested in that, like I'm having a call tomorrow with Quad Racer, so I'm looking forward to that. Always fun to put a face with the name. But you know, if you're interested in scheduling that Skype call with me, I do it in the evening time when I get back from my walks. And you can just send me an email. Email is in the description of this video. You can also reach out to me on Twitter. And but yeah, contact me. Let's set it up. Like I said, there's no pressure. It'd be fun to talk to you anyway. So, and then if you like today's podcast, if you found something valuable here, I really would appreciate it if you would hit the thumbs up button before you get out of here. That would be nice if you like it, if you appreciate it. So, okay. Well, it looks like earnings are out. Okay. I hope I see green here. I hope I see green. Yes, Frank. Sweet. Up 7%. Nice, buddy. I just sold the aftermarket for 480.17. So 480.17. Well, that was a quick trade. 480. I get that right? 480? I can't even go that high on my charts, Frank. Okay, so Frank made a smooth almost 13% on his trade. Well, I guess I'll take this trade off since you... Congratulations, Frank. Woo! Nice, buddy. Nice. Drinks are on Frank for sure today. Netflix up 9%. Wow. Woo! Way to go, bud. Zach says, question though, how do you trade it after hours? Doesn't look like my format allows for that. You know, usually, Zach, on most platforms, you'll have two options. One is just like the regular trading option. I think it's just called, what's it called, everyone? Smart? Yeah, the venue is Smart, and then you can toggle to after hours where you can sell in after hours. And usually in after hours, you have to put in a limit order. It cannot be a market order. Hope that helps. MA says, how do you sell after the market? Yeah, you go to your platform, and instead of just the regular market, on mine it's called Smart, you switch it over to after hours trading. Frank says, Zach, with the aftermarket, it's risky. That is true. It's risky. You don't have as much volume. There's not as much liquidity. The bid-ask spread are much wider. So you can find yourself being able to easily get out of something in the daytime, where after hours you struggle. Kind of like buying and selling options. You're just hoping that you're going to get filled. Wow, way to go, Frank. Proud of you, my friend. Just to set a good example here for everyone, listen, this worked out for Frank, and I'm definitely happy that it worked out for Frank, but if you buy in front of earnings, you are really kind of gambling. You do not know which way it's going to go. Unfortunately, this went up for Frank, which is fantastic, but I just want everybody to know it can go down just as easily. So I don't want you to look at this and go, oh, all you have to do is buy ahead of earnings and you'll gap up 9%. It could easily have gone the other way. Frank knows that. He's been doing this a while. He certainly knows that. That's why he was so nervous. But just because it worked this one time does not always mean it's going to work. So just kind of disclaimer, I want to put that out for everybody, and I'm sure Frank would agree with that. Let's see what else is happening after hours here. Oh, Amazon's up. Nice. Okay. I mean, not a lot. 19 points. MA says, but what if we know earnings when? What if you know if the earnings are going to be good? Well, thing is, he didn't know. He didn't know for sure. I mean, he had an idea that it was going to. Just like I said before earnings came out, I imagine they're going to be good. But the problem is, MA, is a lot of time the market will price that in. It will anticipate good earnings. You know, people that just first start trading, they're like, why did Amazon go down? They had great earnings. Well, they had great earnings, but it was already priced into the market. So, and then sometimes you'll have a company that has horrible earnings and the stock will go up. You never know. That's the problem. You don't know if the market's priced it in or anything. So there is no such thing as knowing, unless you have, illegal inside information, and then you're breaking the law. Zach says, do you ever really know though? No, you do not. You do not. But, you know, let's enjoy this move for Frank. That's fantastic. But you know, I never buy in front of earnings. I just don't do it. Um, you know, I've made a lot of money on earnings. I've lost a lot of money on earnings, and but really, when it comes down to it, it is more gambling than anything else. And if I'm going to gamble, I guess I'd rather go to Las Vegas and get a free hotel room and buffet and whatever. Right. Unfortunately, the market does not pay you anything for gambling. No perks, no comps. Frank says, I do not capitalize, recommend this way of trading. Good. Glad to hear that. MA says, stay at home trend, positive earnings. We knew it. Yeah, there was a good, you know, it seemed like it, but I wouldn't have been surprised if it went down either. Brian says, Snap is up. Dan, also, even if we knew the earnings report ahead of time, the stock move is not always logical. 100%. 100%. Thank you, Dan. Bing, he says, there are so many earnings coming out. How did Frank choose Netflix instead of other stocks? I think trading, sometimes we need feeling. I may be wrong here. I don't know how Frank chose Netflix, but, you know, it's a big stock. Everybody knew the earnings were going to come out today. You know, I'm sure a lot of people will do that with Amazon later this week. Amazon's another one. Look, we know Amazon has done well. We know that, right? I mean, I'm sure they're going to have really good earnings, but you could have earnings and it could go down because it's already been priced into the move. David says, Netflix earned $1.57 per share, but still missed. Yeah, so there you go. I mean, look, if I would have told you before the earnings came out, look, Netflix, they're going to earn $1.57, but they're going to miss by 5%. I bet a lot of people would shorted the stock and still got beaten up. Glenn says, fail to move back to 2760 on S&P tomorrow, and I will be going short. Yeah, that 2700 level is a key level on the SPX. I know a lot of people are keying off of that. If it goes under, they're going to short. Looks like Glenn's saying 2760. Oh, if it can't get above 2760, I see. Frank says, my plan was to take a risk I could afford to lose. Well, there you go. You always have to kind of assume that you're going to lose that and have to be okay with it. Bing, he says, I think it is the same as Adobe trade. Steve chose to exit the trade while Greg chose to hold the trade. Is the feeling both of you having here? Well, you know, a little different situation. In some respects, Bing, he, you know, who knows who's going to be right on this, and it's certainly not a competition. But I had very few positions today, right? Where Steve had more positions and more exposure, and I had a very small position size to begin with. So, you know, that factors in. If I would have had 6 or 8 stocks today, sure, I would have been getting out just to decrease the exposure. But essentially, that's the only directional position that I have right now is Adobe, and then the overnight SPY trade, but that's a little bit. And it was such a small position size, and it's still under the 1050. So I think Steve got out of all his positions, right? All right. All right, so it looks like I'm taking all of the positions off the board. So Monster, that one kind of puked on the way down here, so we'll get rid of that one for Steve. The Qs Gave a lot back today, but still a profitable trade for Steve, so that's good. Google, this one was a loss. And then Apple on the 1050. That one was, oh, here we go. Yeah, that one was a loss. All right, so the sole survivor is Bing He with his TLT trade, which is positive. So congratulations there, buddy. Boy, and Frank got out at the right time too. He got out at 480. Now it's back down to 447. So he hit it right at the pop. Wow, that's a freaking amazing trade. Really good. Looks like Chipotle topped earnings also. Up 3.98%. Fantastic. Bing He says, in Chinese Kung Fu, we say if the sword becomes you, you become the sword. You are the master. In trading, if you are the market and the market is you, then you become a good trader. Oh, very nice, Bing He. Thank you for that. Definitely thank you for that. Okie dokie. Well, if anybody has any other questions, please let me know. I'm happy to answer them. If not, I'm going to get Katie. We'll get on the trail, go for a little hike. It's a beautiful day outside. All right. Okay, everybody, listen, before I go, please just remember, try to go out and do something nice for somebody today. Just be nice, say hi, be friendly, be pleasant. Give somebody a call, check in on them, see how they're doing. I think there's a lot of people out there who would really appreciate just a call, a little check-in call. And, you know, it's a nice thing to do, right? And then also, if you could hit the thumbs up button, if and only if you appreciate the content, I would really help that. It helps grow the channel. Zach says, thank you, Greg. Awesome stream. Thank you, Zach. Appreciate that. That's nice of you. Miko25 says, thank you, Greg. Enjoy your hike. All right. Well, listen, everybody, enjoy the rest of your day. Be safe, be nice. And hopefully we will see you tomorrow during the last hour of the market. And congratulations, Frank, on your trade, man. That's very good. So, okay, have a good day now. Hope to see you tomorrow. Take care. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and Forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.